2 years ago, Dawn Warfield was drowning in credit card debt to the tune of $80,000, nearly 10 times the $8,300 the average American family owes on their cards.
There was about 17 credit cards at that time.
Dawn was dealing with several factors against her: high credit card interest rates, a divorce, and using her personal cards for the high expenses of opening up a second location of her video store.
Every month I was writing out 17 checks, and the interest rates, they ranged from like 6% to 33%. Quite honestly, living beyond my means is another part of it. I'll own up to that. And just, you know, there's always unforeseen expenses, and when you're making the minimum payments on these credit cards, when you can't afford to make more than that, they don't go down.
So Dawn took matters into her own hands. She sold the second store location, stopped using her cards, and called for help.
I sat down one day and I called each credit card one by one, and I asked all of them to work with me to lower my interest rate.
But that didn't go anywhere. Instead, she was directed to the debt management program of the not-for-profit Consumer Credit Counseling Service. Counselor Eric Jackson helped Dawn analyze her bills and expenses and created a plan to help her get lower interest rates. Now she makes a single monthly payment.
I don't even have to think about it, which makes it a lot easier for me because, you know, when you have a lot of debt, it's not just financial, but it's emotional, you know, even physical. You think about it all the time.
She's making her payments on time. You know, they're posting to her creditor accounts. You know, she has very low interest rates. That was one of the benefits. And she's definitely doing well. So she is on track to get her debts paid off in full within the 5 years.
Today, Dawn is less than $40,000 in debt.
I'm about halfway, yeah. It hasn't been easy, but we're getting there.
Alan Chernoff, CNN, New York.